Coming up, the Reserve Bank leaves interest rates on hold at the last meeting of the year, but changes some of its language. Rupert Murdoch's own succession drama, and China promises more stimulus. All that and more next. Hi everyone, it is your daily 10-minute business and finance news wrap for this Tuesday, the 10th of December 2024. The Australian share market fell today by 0.4%. We'll have the details with Catherine Allfrey from Wavestone Capital. Catherine is also part of a new fund backed by Nicola and Andrew Forrest, managed by 12 women. So we'll have more on that in a few moments. But first, the story of the day, and that's the Reserve Bank leaving interest rates on hold for a ninth time in a row, a 13-year high of 4.35%. Now, while it noted economic growth is weak, the labour market remains tight, and even though underlying inflation at 3.5% is easing, the RBA says it's still too high. However, there was a change in language, and for that and more, I spoke with the Chief Economist at NAB, Alan Oster. Alan, in leaving interest rates on hold, the RBA board today said that it is gaining confidence that inflation is moving sustainably towards target. Now, that's a key condition to warrant an interest rate cut, isn't it? That inflation doesn't necessarily need to be within 2 to 3%, its target band, rather that it needs confidence that it'll get there, right?
Yeah, and really what they said is that they're becoming more confident that they'll get there by the end of 2026. So that's sort of still a long way away. I think the data is really important as you go forward. And to me, I think the Reserve Bank will be most sensitive to the unemployment numbers. If they start to ramp up, then they'll bring forward the rate cuts. But at this stage, we're still confident that rate cuts by the middle of next year.
Yeah, let's go into more detail about that, because the market now is pricing more firmly for a February cut. NAB, as you mentioned, along with ANZ, Westpac have currently penciled in May. Does this meeting today change things a bit, especially in the context that we hear the RBA say that household consumption spending is still being weighed, and your own NAB business survey released today showed that confidence is falling sharply in November?
I think basically where we're at is that the Reserve Bank to us doesn't change anything. It's a possibility that if you got too bad labour market numbers, there's a chance that they might do a cut in February. But there's not a lot of room left. So you've got one labour market tomorrow, and you've also got one basically in January and maybe February and January. So you've got two more labour market numbers. You'd have to have things go pretty badly wrong for them to cut again in February. Now, I think the market's got 15 points out of the 25, but they've still got mainly April, May as their main area. In fact, May, they've sort of pushed up to 50 basis points. But, these markets move around a lot. And so, you shouldn't just say, oh, the market said this, therefore that's going to happen. So we're still comfortable with mid-May or mid-year, but there's a chance that if things went bad, they could do February.
Are we confident the other way around's not going to happen? In its previous statements, it said it's not ruling anything in or out. Does that now that it's not saying that, does it basically mean, hey, we're not even considering rate rises now?
I think you would have to have some really surprising inflation numbers for them to consider one again. So I think now it's more you don't do anything, or maybe when do you start cutting? But I sort of always thought that was the case anyway. This idea that I did not believe, and I do not believe they ever seriously thought they would be putting up rates. And when I talk to the RBA, maybe it's just my area of specialty, all I want to talk about is the consumer and how the consumer's going. And we think the consumer's not doing great. Our anecdotal stuff on Black Friday says It increased a lot, as it normally does, but I'm not sure that it actually did more than the seasonal factors. In other words, I think consumption wasn't that strong in November.
So what you're saying then is, though, even though the consumer isn't necessarily strong or that confident, right, it still comes down to them holding a job. That's why interest rates haven't
Yeah.
necessarily fallen.
Yeah, and I think basically one of the big differences between now and previous areas or previous recessions has basically been that the unemployment rate's really low. And so if you've got an unemployment rate that's really low, even if you're sort of running out of money, you can juggle. So you can basically go and get a second job. You can cut back on some of the stuff you're buying. You can buy lesser quality stuff. And so it's not likely that the consumer is going to fall over in the near term. And that gives the RBA time to sit back and watch, particularly inflation.
And I think we saw stats from the ABS last week showing that there's been an increase in the number of multiple job holders too anyway. Finally, Michelle Bullock also said in the media conference earlier today that she stressed the word thinks. We think that the economy is still on a narrow path. What do you think?
Yep. I think it is. I think that maybe the end of the year wasn't as good as what the Reserve Bank hoped, and certainly September wasn't as good. Although it was pretty similar, I should say. I can say this for once. It was exactly what we thought. But, next year, I think things will get better. But people will think about rate cuts, et cetera, that they're coming. And we think that when they start cutting, they'll actually do more than what the market expects. So the market has about 3.5 as their bottom or terminal rate. We're like 3.8. Around 3.1.
Okay, so Alan Oster there saying it doesn't necessarily mean, or what's important is how hard the RBA will cut, not necessarily when they will start. That's Alan Oster there from NAB.
Now, Market Day on the SBS On The Money podcast.
The Australian share market fell today. The S&P ASX 200 off by 0.36% to 8,393. With the details, I spoke with Catherine Allfrey, Portfolio Manager at Wavestone Capital. Catherine, first of all, how did the market react to the decision by the Reserve Bank to keep interest rates on hold, because it was expected?
Well, it was expected, but I think she's actually, laying the groundwork for a rate cut probably in February. And previously, I think the market was expecting it to be in April, and they're still pricing a full cut by April. But at this stage, you're seeing a slight, chance now that the market's digesting what she's got to say, and that we might get one in February. In terms of the stock market, we've been dominated by the Chinese headlines today, to be honest. So we had, the market was down sort of about 0.6%, but has actually rallied since interest rate cuts are on the horizon.
Yeah, speaking of China, I just heard the Treasurer comment about it, saying that he welcomes this decision by Chinese officials to promise more proactive fiscal policy at its monthly meeting. Although he says there are still some serious issues with its economy. What does the market think about these moves, and what kind of policies though are really needed to help push Chinese economy to its growth targets?
I think the market's been expecting some sort of response from China because of Trump's election and because of the tariff issue. And so the question was when it would happen. And so I think we've been taken a little bit by surprise today. We expected some commentary out of the Politburo later this week. But today it was like, right, we're laying the groundwork. We're going to have loose monetary policy, constructive fiscal policy. We're going to stimulate the consumer, which, many economists have been calling for a long time now, and they're going to stabilise the stock market and the property market. So I think they're all pretty positive signs, which is why our Australian resources stocks just took off as soon as those announcements came out.
Any other company news you're keeping an eye on today?
Well, I think the big news overnight was the News Corp decision with Rupert Murdoch in terms of the court case. So not so much for News Corporation, because Fox News is actually owned more privately, but it's always interesting. It's like an episode of Succession. that we've all been addicted to. So that's why I think, the market's quite interested in anything to happen with the Murdochs.
Just more on that, just to put it into context for our listeners that might not be following it. Rupert Murdoch failing in his bid to change the structure of his family trust, which currently splits control equally among 4 children. He wanted to give control to Lachlan, who is the CEO of Fox Corp. What do you then think this will mean for the family and for assets like Fox and the management of News Corp?
So Fox is a separate asset owned by, obviously, the Murdoch family. So you put that aside, but 75% apparently of the profits of Fox come from Fox News, and so it's always been right-leaning. And so the view was that obviously Lachlan was going to take that over and continue in the Rupert legacy of keeping the right-leaning show, whereas his son and daughter are probably a bit more left-leaning, and they wanted to see, a change at the top in terms of the way Murdoch was producing news. And so I think it's all just quite fascinating. In terms of News Corp itself, it just means that the 4 of the 6 will continue to have a say once Rupert passes, whereas before, Rupert wanted to ensure that Lachlan would have pretty much sole charge of the future of News Corporation. So it's fascinating to watch as it plays out.
One of the biggest losers on the market today is Perpetual. What do you know about it?
Yeah. Oh, it's the Australian Taxation Office made a decision. They're looking, obviously, to spin off one of their assets. And as a result, they asked the Australian Taxation Office for a special compensation, effectively, so that their investors wouldn't have to pay tax. And they would have to pay tax, but just a small amount of tax, sort of $100 to $200 million. And the Australian Taxation Office never look a gift horse in the rejected gift horse in the mouth, and they basically said, "No way, you can pay the full tax. Thanks very much." So it looks like this will scuttle the deal, because I can't imagine that shareholders will now vote for the deal given this tax decision.
Okay, it's coming to the end of the year. There's talk of a Santa rally, as there normally is, right? Where do you see the opportunities for investors at the moment?
It's really tough, right? Because the markets perform pretty well, despite the GDP backdrop, despite the fact that we haven't had rate cuts. So in 25, for the Australian equity market, we can look forward to an election. We can look forward to rate cuts. And so you've got to look at the stocks that have really lagged, because the tech stocks have done particularly well. Consumer discretionary stocks have done well. And so, some names that have lagged, like CSL or Santos, finally we're going to get some production growth out of Santos in the back end of next year. And so you get some organic growth, which means that the company's less reliant just on what the oil price is doing. And given the oil price has pretty much collapsed and everyone's so bearish on it, that's sort of one I would call out in the value area. But other than that, it's just, we continue just to focus on our quality names, but we've had a number of companies done exceptionally well this year. And so it's hard to, really push them when the market's had such an exceptional run this year.
And just finally, you're part of a new all-female fund announced last week called Future Generation Women. It's backed by Nicola and Andrew Forrest's Minderoo Foundation. We know it's for high net worth investors. But what makes this in this fund so special? How will it invest, and why are you involved?
I'm involved because it's supporting charities, particularly mental health for youth, which I think is a crisis in Australia and very important. And so what they did was they have an investment committee, which is actually made up of 3 women and 3 men, and they approached 12 Australian fund management organisations where they had women leading portfolio managers within those teams. And what their intention to do is obviously have this fund. A Minderoo Foundation, the Forests have actually backed it with 100 million to start with. We'll all receive a portion of that 100 million into our fund, and we'll all manage it pro bono for charity.
That is Catherine Allfrey there from Wavestone Capital. This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.